Hello and welcome to today's live trading hour here at the Live Trade Room, where we'll be covering everything you need to be able to pick out those high probability trading opportunities. So we are trading, or we're just about to approach the US trading session. So we'll have an influx of capital coming into these markets shortly. We've got a couple of interesting opportunities to perhaps focus on. So without further ado, we'll start then with our risk warning. Of course, please take note of the risks involved in trading these financial markets. Just another thing, actually.
UK Prime Minister Boris Johnson.
I'll turn that off. I'll turn our squawk off there just for a moment. So if you can take a brief moment to familiarise yourself with a risk warning. If you do need any support trading these financial markets, you can do so through the Live Trade Room. We've got a wealth of education and daily live trade rooms and mentorship for traders to sort of fine tune perhaps the areas in which you can improve upon, that your ability to embrace risk is really quite important for traders. Controlling that risk, understanding how much capital you're committing to each trade. There's very very easy to identify and relatively easy to apply strategies you can adopt. So for more information, just go to our website, thelivetraderoom.com, and feel free to chat with us through the chat function if you have any further questions. Okay, so let's get straight into it then. So we'll start with our calendar. So today now is Tuesday the 18th of May already. This year's sort of flying by pretty quickly. And you can see there's not a huge amount to have to deal with today. We do have an important news event for anyone trading the British pound. We have a BOE, Bank of England Governor, Bailey, which is due to speak. In fact, on a really quite important topic, and they're due to testify on quantitative easing before the Lord's Economic Affairs Committee. So there's a strong focus on the accommodation that's currently in place by central banks. At what point will that accommodation start to be removed as economies go back online, people go back to their jobs, and the economy starts to open up? So at what point does the central banks slow down? I suppose it's referred to as tapering, taper their quantitative easing. So he's going to be grilled on that, no doubt, today. And we saw what Janet yelling at the Treasury, like what happened to the markets when she misspoke about the Fed increasing interest rates. We saw a very significant move to the downside for the indices markets. So we'll see what Bailey has to say for himself as well. But that's really the only significant news of the day. Nothing out of the sort of the macro, nothing out of the unusual, to be fair. So we've got economies opening up. There's certain restrictions being removed. The vaccine rollout is continuing. It's pretty heavy pace, and there definitely seems to be this. Sorry, let me sort that out. There definitely seems to be a positive sentiment behind these markets. So as a result, let's delve into some of the markets that we were looking at last night. We've had some decent moves in some of these markets. The first one being the dollar pairs, so the euro dollar and the pound dollar to the upside. So every evening at 9 p.m. we do meet and we discuss some of the opportunities, the high probability trades. And for the pound, it's above the 140, 147. So we've had a nice move to the upside. And for the euro dollar, it's actually above yesterday's high, around the 121, 68 level. But generally speaking, just an explosive move above yesterday's highs across the couple of dollar pairs. So we can look at these markets really in terms of a risk on perspective. So we can see that the Nikkei has failed to make that little move further to the downside. I'll just put on our squawk again just in case there's any kind of significant market updates. So the S&P, we've got this market just creating a bit of a double top up with these highs now. It will be interesting to sort of monitor these markets and see how they're performing. Broadly speaking, you can see that they are there's mild strength. It seems to be reversing just a little bit as we speak. And this is what's interesting about when you get capital beginning to move in as we approach the US Open. So there's a bit of selling creeping in, but broadly speaking, you can see these equity markets, and it's fairly easy to identify that. In fact, these are really kind of rolling over now, aren't they? So the DAX is picking up pace to the downside. So we are already in this market to the downside. It's just we were preparing ourselves to be stopped out up at these highs, but as you can see, it's created a double top. And this is really why we have our 2 times the spread rule above the high. So that just meant we just kept our stop loss just outside of that level. And now, I mean, this is sort of almost a late day reversal. So when we talk about the sessions, we look at the European session, and we had a really strong Asian and European session. And now prices are just beginning to pull back, and this is as we approach the US Open.
Both US and European equity futures in recent trade.
As we approach the US Open, there's a bit of a late session reversal, let's say, and that's what we're looking at. So it'll be interesting to see what developments we have there to work with. So that's the S&P. So we've had a pretty much a risk on market condition for the majority of the trading days so far. That seems to be just unwinding a little bit, but we'll see when this market comes in. So we like the euro dollar and the pound dollar to the upside, so we can go in and have a look at those. Just commenting on the yen, bit of yen strength against the dollar, but significant weakness against the euro and the pound. So when we're looking at currencies, we are looking at euro strength and pound strength, and those are pretty much the trades. So that's why we're seeing the euro yen and the pound yen creep to the upside. The dollar yen is squeezing lower. So actually the better opportunities are in the euro dollar and the pound dollar. So that fits to some degree. We've got the US dollar index just making new lows now, which is it's kind of been in the pipeline, but there was we've had some quite mixed market fundamentals and economic data's releases. So we've got this strange dynamic between a reopening economy and the uplift that's likely to lead to with more money in people's pockets, having saved a significant amount of cash over the last 12 months without a means in which to really spend. So there's very much this inflation situation, but we're getting really poor economic data, and what we mean by that is things like the unemployment situation. We're expecting 1 million jobs to be added the non-farm payroll figures from a week and a half ago. We're expecting 1 million jobs. We saw 266. So obviously that's not performing as well as these markets were expecting. Also on the inflation side, we had much increased. We had CPI figures and CPI and PPI figures. So that gives you a little bit of an indication on the inflation story. And unfortunately, we've been experiencing higher than expected inflation figures. The central bank or the Fed are at large to actually point out that it is transitory, that they do see an uptick in inflation, but it's under control. It's fine, and that's really what they're asking the markets to accept. And so far, they're quite erratic. If I can show you like the S&P, which is a good kind of indicator. If you look at this price action, it's kind of a it's broadly speaking a little bit erratic within this zone. You could argue between 41.94 and 41.13. So although we get these little breaks, little break and reversals to the upside and a little break and reversals to the downside, it's broadly a consolidating market. So what it leaves us with is this little, well, it's not a little question mark, it's a significant question mark over these indices markets. And that's a fairly tight range as well for a market that is of the size of the S&P 500. So that's the context. That's the market conditions in which we're trading. So we need to take that into account, really. Yes, bullish. We are very close to all-time highs, but we've definitely had its period of selling. And this little bit of price action here was when Janet Yellen, mentioned about the Fed increasing rates. There was a bit of a wobble, and then we saw the inflation story, the poor CPI figures kick in, so prices sold off even more so. And I think this candlestick, we saw really negative PPI. So we had some bad news, but some really positive price action. And all that normally does is prepares us for actually the next leg to the downside, because we see this all the time. But markets are so skewed at the moment, it does make that decision making a lot more challenging than we would normally anticipate. Okay, so some of the other markets that we were looking at from last night, we've had a strong move to the upside above the 66.42, and now prices have kind of rolled back to that level. So ultimately, we're quite bullish, the indices markets. We're bullish the oil markets and commodities in general. You've probably heard an awful lot about it. The uptick in scarcity, and as a result, the uptick in price of a whole variety of different kind of commodities, and gold as well is it's a hedge against inflation. So if inflation is likely to push higher, it creates a bit of a nervous environment, and what you're likely to see is some capital coming into gold as a result, and that's pretty much what we're seeing, with plenty more upside potential. We've been rolling over since July, September of last year. We've been rolling to downside, and now we're breaking out of this little zone. So plenty more upside in this market. It's not like the move is finished. So we do like this market above yesterday's high. There's a bit of softening creeping in as we speak. Okay, we'll see if we get any further updates on these markets now in just a moment. So let's revert back to our trade plan. What I'm going to do is I'm just going to swap the euro and dollar with the pound dollar. Just bring this to the downside. We'll bring the euro dollar just up here. So we'll fix up our trade plan for the session. We're interested to see what happens in the euro pound, see if we do get that little rollover trade to the downside. So we're getting an uptick again in the pound yen. Okay, and then it's then we'll have a look at the crude oil market. And the indices markets that we were looking at from yesterday was further downside in the Nikkei. But look what we've seen. We've seen actually a really quite a bullish response, and we're trading around that monthly low. So we're grazing above it and reversing and grazing above it again, and now we're technically above the monthly low once more. So I think you know, as far as this trading session is concerned, the S&P now is a far more interesting market to monitor. Okay, so we can certainly keep a close eye on this trade. So what we might do with the is to just see the price action on a smaller time frame, just to get familiar with what, you know, truly what's happening with this trade. Oh, of course. Feel free to post any questions or any comments of any kind into your chat box. So we're getting this uncomfortable pullback in the indices markets. What we'll do, you can see the, broadly speaking, you can clearly see the
spokesman for UK Prime Minister Boris Johnson says intensive talks are ongoing on the final part of the UK-Australia deal. He says there's agreement on most elements of the UK-Australia trade deal.
You can see the consolidation really over time. it does feel like these markets are a little bit more nerve-based, a bit more sort of hesitant than what we would like. So we can see these markets just okay, so we're actually seeing the best opportunities in the euro dollar to the upside, the pound dollar, and the dollar yen. So we can go in and have a quick look at these each on the smaller time frames. Let's go down into the hour. So it's a clearly defined sort of breakout trade to the upside above the 21.68. So a good move higher. What we generally look for now is the pullback trade to get into the pullback, and you can see it's just pulled off its highs a little bit, so we might get a bit more clarity on the smaller time frames. So you'd really want this market just pulling back to 21.80 to get the next level to the upside. Hi Chris, good afternoon. Could you look at the pound Aussie? Yeah, we'll have a quick look at that in a second. So let's just amend this one.
Comments from the US Secretary of State Blinken says the US goal remains to bring violence to an end as quickly as possible, speaking with regards to the Gaza conflict.
Okay, so we're looking for that pullback trade around this lower level. We've just sort of accelerated higher really. So that's the euro dollar. Okay, if we just do a little trade plan for these two trades there, Chris, and then we'll absolutely go in and have a look at the pound Aussie. So similar situation, we're looking at on the 15, so let's have a look at it slightly bigger time frame. Of course, this is the level now that we'd be interested in this market coming back to. There's your strong resistance levels, which now become support. So if prices come back lower, you'd expect that next leg to the upside from these lows. So the 41.66. 41.66. Okay, and just the last one, really very similar to the pound dollar. So let me go back to that daily time frame again. So this was the level from last night's live trade room. So we have a trade plan webinar every night at 9 o'clock. So we can be ready and prepared for these moves. So it's really above the 154.40. So I would imagine a little pullback to that level would probably be, again, the trade. We didn't get too far away from it there at that point. So we want to be making decisions around levels of support and resistance, and these are ultimately your levels of support and resistance. They're often categorized by multiple layers of lines on a chart. So don't let these lines kind of put you off or whatever. They're just identifying multiple touch points. So really it's just something. We just take this high in here. So really, we're talking about markets just coming back inside this zone. It would sort of engage with the 50-period moving average as well, and from there we can certainly plan our buy trade. And don't forget, these markets, that kind of pattern is more of a reality than just a linear move to the upside. So what we spend time doing is just looking for those levels where these markets can pull back to. The alternative to that is that a floor is created, an extended floor, and then we get a breakout to the upside of that floor, and we have clearly defined stop losses as well. And that's the other thing you want to take into account, is how do you predetermine, define a decent stop loss placement. So we'll look at this to the upside. So it's a pullback. So it's a high probability pullback. Buy trade. And we just use the phrase sort of around a particular price point because it'll just take a little bit of time to smooth itself out. But you can certainly look at this if prices do come back to that 154.40 level. 154.40. Okay, that was just a fraction too big there, so I'll bring it back to the 12. Okay, so it's just back into this little zone in here. So if we do get those markets just pulling back to those levels, just looking at the S&P, we've got this market just rolling off the highs. We almost have a double top here. So when you see price action like that, you got this M formation in these markets, so you can it can actually become quite bearish. But of course, you need to make this double top, and you need this market to actually, break this level with momentum. There's a decent high probability trade. We're already in this trade to the downside, and we have a decent technical stop loss. It very well may test those highs again. Certainly that's what the dollar's sort of telling us at the moment, and the fact that we've got the commodities threatening to push higher as well. So we're just monitoring the S&P 500 for now. Okay, so Chris, would you look at the Aussie dollar? Sorry, the pound Aussie. Excuse me. First things first, we can do a bit of strength and weakness analysis on the performance of the dollar against both the pound and the Aussie, and you can see that the pound has been pushing higher against the dollar. We can take low to high just as kind of a crude indicator, so a 90 pip range, and then you can compare and contrast that with the Aussie dollar, because they're both paired against the dollar to try and work out. So you can see that the Aussies are also, quite bullish against the dollar, and you can see that the range from high to low is not as much as the pound dollar, and you wouldn't really expect it to be, but 53 pips versus what did I say, 90 pips, didn't I? So it's almost twice as volatile. So straight away I can see that we're probably likely to look for a buy trade in the pound Aussie. Is that something you're looking at as well, Chris? Are you looking at a buy trade I mean, we'll go into it now and we'll just see, but being able to do a little bit of sort of quick analysis can at least perhaps prepare you for trading in the right area. But it also depends whether you trade momentum and trend, or whether you counter trend. So it depends, I suppose, what approach you actually adopt. So I think I've got the Aussie dollar down here somewhere, didn't I? The pound Aussie. No, I don't. So I just need to just get it up on screen. So we've got 10 minutes before the US Open. So we'll see how this capital will engage with these markets. There it is. So I haven't looked at this trade. I haven't looked at this trade actually for a good few days. So let me just make the conversion then. Okay, so I don't know what you're planning to do. So you were probably in it to the upside, I would imagine. I mean, we can see that we're in sort of long-term consolidation in this market, can't we? To the upside and also to the downside. Just taking these sort of major highs and lows. We've got these levels in here as well. So more recently we've been quite range bound. But this is, this for us is a consolidated market. So as long as you understand those market conditions, and we're up at these highs just in here, you don't have to be kind of too accurate with it. Like this level down here could be pushed down a little bit further, for example. So you're just looking at these areas roughly. So not too surprising really to see this market be a little bit indecisive today. The reason for that is you're trading strength versus strength. So that can often offset each other. So really the aim is to try and trade strength, which is the pound, the euro, the Aussie, the CAD. Well, the CAD had a bit of a pullback, I think. So one of the weaker markets today is the US dollar. And we can see that if we just quickly flick through. So it's very weak against the pound, it's weak against the yen, it's weak against the Swiss franc, it's weak against the CAD, it's weak against the Aussie, and it's weak against the New Zealand. So if you're trading any of these 7 currencies, which are all stronger, considerably stronger against the dollar, then you are effectively trading strength versus perhaps mild strength. It's not to say you won't get the moves. You probably won't get the big moves that you're looking for, because they counteract each other. They just offset each other a little bit. Does that make sense? So are you still in the trade then, Chris? Are you? You were in it for a few hours. Does that mean you're still in it, or are you just not too sure what to do with it? Okay, good. Let's look at it on the smaller term time frame. Just if we break it down even in smaller time frame, you could certainly, I don't know where you place your stop loss, you could certainly bring your stop loss perhaps up to this low in here. I mean, all that's really happened is this market's pulled back off the high. So we've got the breakout to the upside, we get the pullback, and now it looks like we're extending this market to the upside. Oh, you've sold it already, so you've already got out of it, I would assume. So feel free to put in the actual entries and the stop loss if you want to. But if you've already sold it and if if you were able to get a profitable trade out of it. It's just, this is a kind of a classic consolidated market, and we get a breakout above the upside. So we look for often more the breakouts above the 8200 level, 18200. That would be the level at which we would get it, look to get in, and you'd have to be prepared for the pullback, and it probably kicked in quite soon. But our stop loss would easily be, so this would be an entry level, and this would be kind of a stop loss placement. So you've got that sort of higher high aspect to this trade, and acutely a higher low. So that's just a market that's grinding higher. Yeah, so you wasn't sure about getting back in. I would probably hold off if I was you, just purely because they're both strong against the dollar. So, you know, the market that's likely to give you the better opportunity, and I appreciate they've kind of already moved to a certain degree, would be the pound and the dollar, and perhaps the Aussie and the dollar. Trading any of the dollar pairs really today. So for now, it doesn't look like we're going to get our pullback in these markets just yet. It's just, I mean, I suppose irrespective, Chris, of the opportunity, we do want to avoid trading strength versus strength. And if you can identify strength versus weakness, and you can do a little bit of comparison against the dollar, that's really why we look at the $7 pairs, so that we can see how each market compares against the dollar. So we've got a common denominator across the currency markets, and we can see where the strength and where the weakness lies, and that really does help. So this indice markets are still threatening to just squeeze further lower. Yeah, that would be our foundation really, in terms of decision making. So, and it's not to say that the pound isn't going to fly higher. It very well may do. It's just probably better opportunities elsewhere, perhaps. Hi David, you called the high of the day in the euro dollar, a 14 pip stop loss. Let's see. Okay, very good. Yeah, in our live trade room last night, the ideal entry was just to break above this level in here, the 121.68. So actually we're waiting for a bit of a pullback in that, David, as you can see. That's the euro dollar. So are you looking for a sell trade up at this high with a 14 pip stop loss above it, or are you looking for a buy trade? Interesting. Okay, we shall see. Yeah, okay, so you're a sell the high type of trader. Nothing wrong with that, absolutely not. So you're getting in around the 22.20, somewhere like that, and you've got a 14 pip stop loss. So are you looking for prices to actually roll back down to the level of support then, the 121.80, something in and around that kind of price? Okay, interesting. So we are still in this S&P 500 sell trade from yesterday. We extended lower and we kind of reversed back.
AFP reporting Israel says they've reshut the Gaza crossing following the recent mortar fire.
Okay, some awful goings on in Israel at the moment, obviously. So crude oil, gold. There's just a bit of softening really across the commodities. Probably because the equities...
And crypto news, the Chinese financial industry body says both financial and payment institutions must not conduct cryptocurrency related business.
We do speculate and just kind of wonder that the response from financial institutions has been very bland towards cryptocurrencies, which is a major threat to their business model effectively. And there was no doubt about it, the crash in late, if we're looking at Bitcoin, late 2018, after prices skyrocketed to that $20,000 level in Bitcoin. There's no doubt about it that financial institutions crashed that price action from up at those highs, up at those 20,000 level, and it was a crazy little story actually, because we were sort of talking about that was likely to be the case for a good few weeks before the actual crash occurred. For those of you that were perhaps with us back then. No, I don't have the data to show you. So anyway, we had those prices tick up close to 20,000, and what happened was your financial institutions, your regulated financial institutions, were able to get involved in institutional trading when it comes to Bitcoin, and what they did was they pushed prices higher initially for a period. So I think we break that $20,000 level. We were very, very close to it, and then prices collapsed to I think about 3,000 or 4,000 in the end. And that was always going to be in the pipeline, because the initial reaction from your financial institutions is we're going to try and short sell markets like Bitcoin, and they were very successful at doing so. And people made a lot of money. A lot of people got burned. It's such a speculative investment. It could literally be at any particular price in 3 months' time. It could be up at $80,000 or it could be down at $2,000, and you wouldn't be surprised if it went either direction. Probably it's likely to be to push higher. You would assume, just by the furore and the appetite for it. So it'd be interesting to see what happens on these dips. This is a structural failure as well to the downside for Bitcoin on the daily, so it could lead to something more significant to the downside. And that's the problem about these speculative markets. And I mean, there's no reasons for really prices of Bitcoin to be up at 50, 60,000. I mean, there's nothing underpinning that valuation. It's purely off the back of what someone's prepared to pay. And the problem with that is you can get like 30% fluctuations in very, very short periods of time, if not more. We might get another flush to the downside. Okay, so we're making these new highs. We're looking for a constructive pullback in the euro dollar. If we can get it, just top left. At the moment, it looks like it's just going to squeeze these new highs. So this is our trade plan for the day, currently up on screen, and these are the markets that are giving us the best opportunities. Try and make it as clear as possible for you. In fact, this is still on the daily time frame, so let me take it down to an easier time frame, just like the euro dollar. So we'll leave these in play now, so we can monitor them as we go. So we've got US capital coming into these markets. Just get rid of the one-click trading so we can see it a little bit easier. So we are getting this like floor being created in all of these markets, really. Getting a bit of consolidation over a 3-4 hour period, which is important. Yeah, so David, yeah, so the 120.105 is your ultimate take profit, but minor take profit is... Okay, so that's quite a significant sort of correction then.
So just in geopolitics here, the United States Blinken saying he will meet with Russia's Lavrov in the coming days.
2105. It's kind of down at these levels. I'm always very interested in people's trading strategy. Is there any particular reason why you've picked the 2105, which is this little level back in here, the 2105? Is there an indicator that you're using, or is there some reason why you think this market will pull back to this low down here? Just out of pure curiosity, David, and don't feel like you need to in any way, shape or form. Just very, very interested. But what you do have is a really good, strong, positive risk reward when you trade. So you're looking for a significant multiple of your risk. So you're risking 14 pips for 100 pip return, and I appreciate you got that 2168. So 2168 is just back to these highs. So this is the level that we're looking to get into it if we get a pullback. There's your breakout trade to the upside. So crypto can't stand in front of digital fiat, which is the ultimate goal, you think. Crypto can't stand in front of digital fiat. I mean, there's no doubt about it. We're moving towards a cashless society. So what does that look like? Blockchain, cryptocurrencies is viable. The problem that we discuss all the time is the fact that it can go some way to making banks as a utility pretty redundant, and over time, not necessarily straight away. I'm sure some of your Bitcoin can develop beyond kind of a basic platform for just exchange of goods and services. I'm sure it could evolve. It's a real interesting one. It's a really fascinating one. It obviously makes you wish that you just threw a few quid at it a good few years ago. First popped up on our radar about 2014. We were hearing an awful lot about these crypto type currencies, and you didn't really know too much about it. You know, the price action was very erratic, and like, in fact, it was fairly stable for certain periods, but you were still getting very significant percentage growth in a short period of time. Yeah, it's just turned into an insane marketplace. Okay, we're up at these highs just in here. One digital fiat to rule them all, one digital to find them, one digital fiat to bring them all, and in the darkness bind them. It all probably hinges on your adoption from your financial institutions and the acceptance of everyday people to utilize as a utility, as an accepted form of currency. And if that adoption is in place, then it can literally go to the moon. You see, we have these cyber attacks, and they're often wanting payment in cryptocurrencies like Bitcoin and things like that. So it's definitely a vehicle used by criminal gangs as well, and that's the security, that's the downside of it, I guess. And of course people do the same with cash, and they have done for an awful long time. But yeah, it's a very interesting topic. Yeah, you think they'll only let that be the case if they can be run by central banks, and central banks are talking more and more about digital currencies now. You'll hear it an awful lot. So what we have here is a bit of consolidation in this market with a low around the 12200 level. So we're getting in a little bit higher than perhaps we would like. How much more growth to the upside will we have in this market? It's a bit of it's a tough call. And if we look at this as well on the 15-minute, it's beginning to create that floor that we talk about an awful lot. Floors and ceilings, support and resistance. And now a break above these highs would give us a clearly defined stop loss as well in this trade. So we've got this little buy trade above the 122.22 level. And if you can imagine, if you're exchanging Bitcoin for products and services, it's the avoidance of tax as well. That's a big problem for cryptocurrencies. Like, how will governments, how will revenue? You'll have to declare it yourself. They won't have any way in which they can verify or check or delve into it or anything like that. And they can. You can literally avoid disclosing if you wish to, and that has a tax complication as well, and that's a tough one because obviously economies now, they need more and more taxation, not less and less, and So yeah, there's a taxation issue attached with cryptocurrencies for now. There's just a number of exciting opportunities and also questions to be answered, I guess, is how we could sum it up. It's got a few issues to deal with and to iron out. We might get that adoption. We might get that large-scale adoption. I mean, at the moment, most people are a little bit frightened about things like cryptocurrencies because it's a bit alien to them. But you can imagine 5-10 years time, that might really normalize, and it'll just be like using your credit card, I guess, going to the shops, which is what we currently do. So it's a fascinating topic, and we'll see where it goes. There's certainly the technology behind the blockchain, of course, is profound, and it has many multi-uses as well. Good stuff, guys. So look, we do have a buying opportunity in the euro dollar, actually above the 122.22 level. If prices can break above that level, that same level in the pound dollar is above the 142.17. We've had a decent move in these markets already, so you need to build that into your approach. We've really got a lot of consolidation now in the pound yen, as you can see. So prices are very much range bound between the 154.48 and the 154.77. So a 30 pip range really. And this is an hourly chart, so over 2, 4, 6, 8, 10, 12, over the last 13 hours, you know, this market has hardly moved. So we kind of want to acknowledge that. I mean, what it does is it creates a bit of a ceiling in this market, and if prices break through that ceiling, then it does give us a decent buying opportunity above 154.77. It's just we've had to be very patient now for quite some time with the trade. So that wouldn't be unusual. You'd often get, you know, markets moving sideways for a period, then you get that explosive move higher, and then it drifts sideways again, and then it breaks higher. So it's a common occurrence, even more so over the last number of years. Did you hear the 3D printing buildings only need 2 workers to build a building in 2 days? Really? No, I haven't. No. We know the Chinese built a hospital in 8 days. Was it 8 or 10 days? This time last year with the coronavirus. So we're capable of pretty impressive stuff if we're motivated and have the finances to do it. That's crazy. That's crazy stuff. Technology, no doubt about it, is going to be a massive disruptor. If you can imagine, if you're talking about building a business, building a building or an office space or something like that, and if it can be done with a machine and 2 people, can you imagine the amount of the savings you could make on that? But then the unemployment that would cause would be quite profound. So then what safety net do you provide? Let's say if you need 100 people to build an apartment block or an office space or something like that, and it can be replaced with 2 people and a couple of machines, then that creates problems as well. So interesting times at the moment we're living through. Okay, a little bit of volatility and volume has just come out of these markets. In fact, we had most of the moves over the Asian session, to be fair.
So we're just under 9 minutes now until we get US data. Housing starts. For the number for April, we're looking for 1.71 million on a prior 1.739 million. The range 1.59 to 1.765 million. For the change, prior 19.4%. When it's a building permits, the number we're looking for 1.77 million on a prior 1.759 million. The range 1.675 to 1.85. With the building permits change month on month, a prior of 2.3%.
Okay, so we've got that. It's a minor news event out, but I'm sure we'll get an update on it pretty shortly. So David, can you help me with day trading? I want to cut my pairs to maybe 8 or 10 pairs to focus on. I want things that move during London and New York. That's an interesting kind of wish list you have there. Maybe the euro dollar, pound dollar, dollar Swiss, gold, and the dollar yen. We're massive advocates of predetermining which markets you look at. So we look at multi-asset class. So we look at, and again, they're all the largest markets in the world. So from your currency pairs, the largest currency pairs, the largest commodities like gold and oil, and also the largest indices like your S&P, FTSE, the Nikkei, the DAX, Dow Jones, and things like that. So we have this multi-asset class view firstly, which is an important part of trading, but we talk every night. So David, what might help you is our trade plan webinar every evening. So from last night's session, up on screen we had the euro dollar above the 21.80. We had the pound dollar above the 41.63. The pound yen we had above the 154.39. We also had oil, so above the 66.40 level. We had gold above 18.68, and the Nikkei. Actually, we were looking for this market to tick lower below the 27.620. So we do all our analysis and we do our trade plan. And what you're having issues with is probably trade selection, because you're probably looking at too much. You're probably jumping to, the minors and the exotics and things like that. So we just keep, and some of the benefits of looking at your dollar pairs is, firstly, they're the most traded markets in the world. So you'll always have buyers and sellers for, whatever trade you're looking to get into. So from a liquidity perspective, there's never any meaningful issue with that. The euro dollar, the pound dollar, the dollar yen, the dollar Swiss, the dollar CAD, the Aussie, and the New Zealand. And you can split them into two groups. You've got your commodity currencies like your CAD, Aussie, New Zealand, and then you've got your established currencies like the euro. You got your main currencies like the pound, the yen, and the Swiss franc. So our Swiss franc is a commodity currency as well, but it's also a flight to safety trade. The Swiss franc, traditionally it has been, and same situation for the yen. So we stick to these trades every single day. But what we do have, David, is our daily trade plan for about 20-30 minutes every evening at 9 o'clock. And all we simply do is decide, based upon the close of each market, we determine which markets are likely to give us those high probability trading opportunities. And that's our trade selection. That's the way in which we determine which markets we're going to look at. So basically, we don't get to our trading desk at 7:30 in the morning not really knowing what we're looking for. We go to exactly the markets that we've planned for. And it can really help with that trade selection issue, because I agree with you, it's a bit of a minefield. You can get distracted with markets that are moving in various different ways, and you can all of a sudden become quite confused about what you're looking to do and how you're looking to do it. So in our experience, that's the advice I'd be very comfortable giving you. Sometimes you can overanalyze, you can have too much information to kind of work with. We just adopt a multi-asset class view of these markets. So if we were just trading the FOREX markets just exclusively, then we'd be looking at the dollar pairs so that you can compare and contrast strength versus weakness against the dollar. And then just because we've got a little bit more of an interest in the yen with its flight to safety component to it.
So moving into 3 minutes now of this April US data, housing starts a number, we're looking for 1.71 million, the change prior 19.4%. Building permits the number, we're looking for 1.77 million, with the change month on month prior 2.3%.
Okay, so the yen has an important role to play from a risk-off perspective, and what we mean by that is if we see capital coming out of equity markets, we want to know where it goes, and it can go into bond markets, of course, but in terms of your flight to safety trade, if we're risk-off, we would like to see capital either coming into the dollar, into the yen, into the Swiss franc, into the gold market. So we almost have sort of just a bit of a snapshot view of these markets at any given point in time. And what was interesting from last week's trading was we saw capital coming out of the indices markets last week. If I just show you that on a daily time frame, so clearly defined risk-off markets from last week during this little move in here. Really strong selling. The problem is we couldn't find where that capital was going to. So we looked at the yen, and the yen was selling off, and the gold at the time was selling off. If I get rid of this, gold was selling off at the point of that move last week. I mean, it subsequently kicked on higher, but during that time, so it was a real, and the dollar was selling off as well. So we started seeing strong moves in the dollar. So we were really puzzled by the uncoupling of the normal correlations that we see in these markets, and those are the market conditions that we have to work with right now.
Just to make everyone aware, the US Treasury Secretary Yellen, speaking at a US Chamber of Commerce event, says she's confident that Biden's investment and tax plans will enhance the net profitability of US corporations.
Okay, so we've got this bit of news coming out in just a moment. Does that help there, David? I'm not sure if I've answered your question properly or not, but trade selection is in fact, at the beginning of every single webinar, we do discuss the things that you need to consider before you trade. And the first thing is, which market should we be focusing on? Where do we get the best opportunities?
Housing starts 1.569 million with the change negative 9.5%. Building permits the number 1.76 million and the change month on month at 0.3%. So just to recap, that US housing starts missing the estimate, coming in at 1.569 million, prior revised 1.733 million from 1.739 million. The change for the house starts negative 9.5%, prior revised up to 19.8 from 19.4%. Building permits the number also missing the estimate at 1.76 million, prior revised 1.755 from 1.766. For the change month on month, 0.3%, prior revised down to 1.7 from 2.3%.
Okay, so we're getting these little news events, and these economists and forecasters are all getting it wrong on a regular basis. So all these expected figures, you've got to take them with a little bit of pinch of salt, because you could get something that's really a major deviation of these numbers. So we missed both on the housing, on the building permits and the housing starts. So they're clearly struggling to kind of quantify some of these news events. And this is a minor event. This is not a significant player in these markets. Just trying to get those figures through. 1.70 housing starts, 1.70 versus 1.71. Okay, we should get that now in just a second.
Just in emerging markets, the Brazilian government upgrading their 2021 GDP forecast to 3.5% from 3.2%, also upgrading their 2021 inflation forecast to 5.05% from a prior 4.42%.
Okay, we've got some really bad weather here at the moment. So the bad news, you mean the housing... The housing stats. So there we go. So the building permit came in line, roughly in line with expectations, but a big miss on the housing stats. Yeah, apparently so. This little news event here, and he's talking about quantitative easing. So he's going to be grilled in the before the Lords Economic Affairs Committee. About quantitative easing. So that's their incredible bond buying program, and probably the tapering of that, and if it's the right path, and should we be doing it, and all this kind of stuff. So do expect some volatility perhaps for the British pound. It might be a meaningful event. I can see that the euro dollar, just looking at it off screen, is threatening to just kick on to the upside. And gold is finding a bit of an impulsive move higher as well. So strong period of consolidation really. This is on a 15-minute time frame, and now we're just getting that next leg higher. So where does that sit? So it is an important high, this high that we're currently at as things stand. Yeah. So David, did that make some sense then regarding the trade selection part? And it, to be fair, it is something that every trader needs to make a decision on, what they're comfortable, how many different markets they're comfortable even working with. So for us, it's clearly defined. We've got sort of 15 markets. We go through them every evening, and we identify normally 2, 3, 4, 5, 6 markets. Maybe how many did we have last night? 6 of them. And we've seen progress in most of those markets. It's just your availability to get into those trades then. Obviously, you prefer these moves to occur when you're available, but that's not always the case. And I know you just mentioned as well about you want things moving during the London and the New York. That's an interesting aspect to it, because these markets will absolutely move whenever they're ready to move. And something we've noticed an awful lot in the last 2 years is that the number of late day moves we've seen are unbelievable. Literally as if they could drift sideways for the majority of the trading day, and like 5, 6, 7, 8 o'clock in an evening, you can see those markets, exploding. And we've often, missed some really good trading opportunities because of that. We could be trading the markets from 6:30 in the morning, various different points in the day, but you'd pack up sort of 5, 6 o'clock in the evening, and with family and what have you, and you could then see markets just take off, and that used to be a very lightly traded period of time, and now it seems to be a period of time where prices can move, and the big players in this market are moving these markets at those specific times, and it does create a bit of a problem for us as traders. So this is interesting. We're seeing the equities just tick lower. The S&P is just taking another little move further to the downside, and we're in this trade to the downside, by the way. We've got a double top up here, and we're just seeing some more selling creeping in. The problem is that can be supportive of the US dollar when you get these equities, and this is the other reason as well. It's the correlations that we look at across different market conditions. It can just allow us to just keep on side a little bit. So if we know the indice markets are selling off, we won't be too eager to be jumping into dollar weakness trades, which is kind of what we're seeing now. But by no means is this selling off. No, this is on a small time frame, so we're just seeing a 5-6 hour pullback really. So the opportunity still exists to the upside, and that opportunity would be above the 122.22 if we get that move. So guys, thank you very much for joining us. We do have to shoot over to another trading room. So this is our live trading hour. So we'll be running this from 12:30 every day to 1:30. Sorry, 12:30 to 1:30 every day. We'll go through the options. We'll go through the markets that are giving us the best opportunities. We'll be taking trades if there's opportunities to be had. But most importantly, we'll have a little environment in which we can discuss opportunities, and let's see if we can help you guys make some money in real time. Okay, so look, on that note, thanks very much for joining us. David, do have a look at our membership. We've got membership for as little as $15 a month. So we're very eager to try and keep the price point as low as we possibly can, and something like it comes into play. And we've got a really strong focus on risk management as well. That's a profound component of trading markets. So hopefully we can add some significant value. So just for more information, if you want to speak to us through the chat function, feel free to do it. But just go to the livetraderoom.com. We can see if we can help you there. But if not, feel free to join us here every day. So we'll look forward to seeing you guys soon. Yeah, you're absolutely right, David. The EU is very much taking its time to decide if it wants a breakout. Yeah, you're absolutely right. It's just 45 minutes now of just ticking inside like a 3 or 4 pip range, which is, it's beyond pathetic, really, isn't it? But what that tells us is there is a lack of volatility and volume right now. That very well may change, but that's the other thing perhaps you want to consider avoiding. See, now we're just getting that little move. Now we're getting that impulsive move higher. So there's a potential buy trade in there now.
And we are seeing here the Canadian dollar.
Okay, so I do apologise that we do need to shoot over. I'm going to put that on pause. So there is a viable buy trade now in the euro dollar. You do have a stop loss just below that 122.06 level. So we might get some nice moves in that in the not too distant. Yeah, I know, it's typical, isn't it, David? So yeah, we're now getting that next leg to the upside. So a viable opportunity there. So look, we'll see you all tomorrow for the live trading hour here at the Live Trade Room through a YouTube channel. Give us a thumbs up if you can. Subscribe to our channel. We'll notify you when we go live. Click the bell function, I think it is, and you'll be notified when we go live. And we've got a whole range of interesting videos being put out there as well, so you'll access all of that completely free of charge. And like I said, if we can help you over and beyond these webinars, we'd be delighted to do so over there at the Live Trade Room. So look, for everyone here, thanks so much. Take care. Great to have you with us, and we'll see you tomorrow at 12 noon. This week we'll be doing from 12 onwards, and then from next week onwards it will be from 12:30. Okay, so from everyone here, take care, have a great trading day. We'll see how we get on with this euro dollar, and we'll speak to you soon. Bye for now.